Finally, the market's behaving like you expect when the Fed is your friend. And as I told you at the top of the show, believe me, there are few things more friendly than a 50 basis point rate cut. I've told you over and over again that there are discrete phases in the business cycle. When the Fed is your enemy, when it's raising interest rates, you want to stick with the recession-proof stocks of companies that can produce consistent earnings even in a slowdown. Then once the Fed's done tightening and we start seeing signs of impending rate cuts, you need to load up on the cyclicals, the companies that can see massive earnings growth when the economy accelerates. But what works best once the rate cuts have already started? Yesterday, Sarahman and the CNBC Pro team ran an analysis of which stocks in the S&P 500 tend to perform best over the 3 months after the Fed starts easing. I like this piece. Going back to 1984, they identified 10 stocks with the highest median performance after the first rate cut. And it is really a surprising list. Get this. Western Digital, Lam Research, United Health Group, Expeditors International, Apple, Kroger, Textron, Franklin Resources, Amgen, and Target. Surprising amount of tech in there, too. Surprising amount of healthcare. So let's go through them one by one, because I think it's important to learn from history, whether or not that history ends up being repeated or not.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.